Let's get some insights on the news that's shaping markets. For that, we want to welcome in Jeffrey Small, partner at the Retirement Income Source. Jeffrey, thank you so much for joining us today. All right, you've been pointing out the market concentration that we've seen in Mag 7, right? And given how much the makeup of the S&P 500, seeing the weakness today in tech, no surprise to see the weakness overall in the S&P 500. Do you think there is a risk with regard to this leadership, or is this healthy?
Well, I think the bearish tone right now, the market volatility is healthy. We got prices that were very lofty and too high. We have a severely concentrated market, the most concentrated market historically in the history of the markets. And so, you've got the Mag 7 comprising almost 35% of the market cap of the S&P, and that's a very heavy weighting. They're all at all-time highs. Most of them are at all-time highs minus Tesla. And so if that's the case, pullback is healthy at this point, but I think everything is dependent upon the potential weakness of the economy going forward and what the Fed is going to do. And then the third leg in the stool here that's influencing markets is what's going to happen next week when Nvidia reports.
Okay, I'm glad you brought up Nvidia. I literally just pulled up the chart for Nvidia. It is under some pressure today, off about 3% at the moment, but it's still got a strong gain year to date, up more than 25% year to date, even with today's move. So it's outperforming the S&P 500. It has become, kind of a significant test, if you will, of the health of the market and a driver. How sustainable do you see it in terms of its role as a continued driver through the balance of this year?
Well, I think that the short-term prognosis on that is going to be that we expect Nvidia to exceed expectations when they report on the August 27th for their earnings next week. And if that happens, that's going to buoy back up the entire AI sector. However, if there was an aberration and they underperformed for some reason or missed expectations, that would continue the sell-off, and that would rattle the surge we've had in the tech sector. That's really been sprung by AI. And so, we're kind of at the we're beholding to what happens with Nvidia at this stage. And so good news means the rally continues. If the Fed lowers rates next month, the rally continues more. If Powell decides to take a stance of, well, we think there's the potential for stagflation and we're going to ignore the fact that productivity is beginning to slow down, then we've got some real problems, and there could be more sell-offs, because then they really are anticipating potential economic stigma from the continuation of the tariffs.
Okay. Let me ask you about the thinking that I see pop up a lot, buy the dip, right? The view is that a pullback is healthy, such as that we're seeing, and you buy the dip. What do you think about that view?
I think buying the dips this is a great opportunity. We were hoping for volatility. It should have happened in the first half of the month. It didn't. Now it's happening in the back half. And so seasonally, August is one of the most volatile times in the market cycle on an annual basis. And so this is a great buying opportunity. I don't think we've hit bottom yet, in terms of this volatility. And so we'll have to wait and see what happens. But I think, you've got a few days here before Nvidia reports to load up on some of the best stocks, whether it's Mag 6, Mag 7, or stocks external to that. The market is giving you a buying opportunity right now.
Is this a buying opportunity for Nvidia? I know it's on your picks list, or do you wait for a better entry point?
If you're a longer-term investor, it is definitely a buying opportunity. We know earnings look good over the next 12 months. Even Nvidia's own guidance is 50% increase in net earnings. At a minimum, we see a 20% year-over-year growth on their earnings for the next 5 years. And so, I wouldn't say that we're mid-stage into the AI rally. We're living in a different market period and a different history that's driving the markets, and every market cycle is different due to what's happening in the business realm. And specifically, tech is going to break the records of what the norm is. And so right now, Diane, everyone's kind of freaked out because of the valuation situation that we have, hitting these all-time highs. And really, the Mag 6 and Mag 7 stocks are underpriced compared to the other components in the market in the S&P 500. And the real concern going forward is the overpricing of the other 493 stocks, not so much the Mag 6 or the Mag 7. We had 26% growth on earnings on those 6 stocks. Nvidia hasn't reported yet, but if they stay true to what's expected, then it's a 26% year-over-year growth with only a 33 forward multiple going forward. And so that's a very, very fair ratio. And so, historically as well, it's important to note that these companies are at a 16-year low in terms of ownership from the institutional side. And so, for some reason, they're jumping on the bandwagon to not own them, which is great. I love that. That creates a buying opportunity for all of us.
Okay, and then another member of the Mag 7 that's on your list, Meta, that's also been an outperformer year to date, but it is getting expensive. Does where it stand, do you still like it at this current level? Do you see more room to run through the balance of the year?
At 26 times earnings, we do, we see an 890 stock price in 12 months on Meta. This is a gift that's dropped from, 780 down to 737 today in the last couple of days. Is a gift for investors. They have a massive user network, Diane, 3.4 billion people on the planet. They dominate 55% of the advertising spending globally. They're 80% of the domestic advertising spending on the internet. They have 1 billion users on their AI platform right now. AI is going to maybe add another 100 billion in revenue between now and 2027. This company has just got to be one of your winners. And it's the valuation, Diane. It's 26 times earnings with 35% revenue growth year over year. That is a no-brainer. Now, Meta is one of the Mag 6 stocks, Mag 7 stocks that are technically, and they have more ownership than the rest from an institutional standpoint. But, that just means it's a good stock, is what that means, Diane.
Okay, and also we're short on time, but I'll just let our viewers know you also have Alphabet Google on your list. It's been an underperformer year to date, but you have it on your list as a pick. We will have to leave our conversation there for now. That's Jeffrey Small, partner at the Retirement Income Source. Jeffrey, thank you.